You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. Once again, it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time, once again, for TWIFO, This Week in Futures Options, a program where we break down all the action going up over there at CME Group this week. What's going to light it up? What's going to make it on our tape? Is it going to be milk? Is it going to be silver? Is it going to be nat gas? You never know. That's why you got to tune in every week. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever exciting, at least we tend to think so, network. Remember, if you like asking all sorts of fun questions, and you know the one place to go is our pro Q&As. Those are available on theoptionsinsider.com/pro. Options oddities every week as well. Just gave away our May Pro trading crate to one of our lucky members over there. Theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today, I'm pleased to welcome back our old friend, Mr. Rich Excell, now the director of the Derivatives and Trading Academy over there at the University of Illinois. Mr. Rich, welcome back to the show, sir.
Thanks for having me. Always good to be here. Always have fun in the hot seat.
Yes, a lot of fun to be had. Let's get to it, shall we? A little bit of the old movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything, lighting it up to the light side and to the dark side over there at CME Group this week. If you want to see this report for this week, you can follow us at Options on Twitter. Follow CME on Twitter as well. You'll see it in both camps there, and it's probably the most even week we've had in some time here on the show, listeners. It's pretty close to 50-50 light side and dark side. Interestingly enough, too, also we're seeing very similar percentage moves in terms of the top movers to the light side and to the dark side out there. So an intriguing symmetrical week out there. And Rich, you've done this once or twice now. I think you can handle running through a little bit of the movers and shakers. So have at it, sir. I'll let you run with it. You can start wherever you want, light side or dark side. The floor is yours, sir.
I appreciate that. I'm going to start on the light side this time. I think I always start on the dark side. On the light side, there's a lot of good news out there in certain spots. Depends on where you're looking. In the fifth spot, we have the 30-year up 3.22%. In the fourth spot, we have that communications sector up 3.26%. Maybe a little bit of bond-like equities responding there with the bonds as well. In third, always a volatile place to look. And this time it's on the plus side. Maybe it's breaking out here from above the all-time highs. Bitcoin up 3.3%. In second place on the light side, we have the Ultra 30-year up 4.11%. And on number one on the light side, this has been a pretty interesting one on both the light side and the dark side this year. But there was a number two to the dark side last week, down 11%, but this week up 7% is Nat Gas. And looking at that on the charts, it's starting to be a pretty bit of an interesting chart pattern on the dailies and the weeklies, something maybe worth paying attention to here going forward, especially as we get into what everyone is saying is going to be really, really hot summer. That one should be interesting. Flipping around to the dark side, in fifth place, we have the Mexican peso. I love foreign exchange. Mexican peso, we had elections down there south of the border. Market maybe not liking what it saw, down 3.2%. In fourth place, lean hogs. It's that time of year, I guess. I don't know. Down 3.92%. In second and third place here, we get a couple wheat contracts. Kansas City hard wheat down 4.5%, and soft wheat down 5.47% in second place. But it was also number 5 to the dark side last week, and so the wheat definitely coming under pressure here. In fact, a lot of the agricultural products coming under pressure here in the last few weeks. Worth noting, again, maybe that hot summer is coming into play. And then number one to the dark side, which was number 2 to the light side last week. Number 1 is oats, down 7.06%. So we got a lot in the agriculture complex on the dark side, except for Mexican peso. Looks like a little bit, I don't know what you think, Mark. It looks a little bit like there's an anti-inflation trade going on here, seeing some of these ags coming off some of the things that people like to buy, whereas we see things like the bonds, et cetera, moving higher. I don't know. It's a very interesting tape right now.
Inflation. Who'd want to talk about such a thing? I don't know. That's only a crazy person, I think, would want to talk about inflation. We'll get to that in a second. We will be talking about some inflation, listeners. Hint, hint. A little bit of a tease. Rich teasing his own stuff out there. I like that. Before we get there, let me break down a little bit of the old CVOL action this week as well. Remember, you can run this report for yourselves. Just type CME and CVOL into your browser. You'll get that dashboard. Then go to the aggregates tab so you can see the aggregate combined sectors for all of the different products over there. It's harder to look at the individuals. The aggregate makes it a little bit easier. And then set that date range for 1 week, and you too can play along with this. You would see at the top of our list this week is the energy complex, kind of going along with what Rich was just saying out there with Nat Gas, running away with it to the light side, up 7.25%. Nat Gas, obviously a big component of energy vol. The energy vol aggregate CVOL is 55 and 29, up 2.82, nearly 3 points on the week. Worth noting, though, they are close to, but not at their highs for the week. The high for the week was 56 and 3/4 set earlier this week. The low 47.74. So actually an exact 9-point vol range on the energy complex this week in CVOL, which is pretty wide. That's kind of interesting, hanging out near the upper end of that range right now. Number 2, we have the aggregate commodities CVOL. That's at a 36.42, up 1.41 points. Today on the week, 32.47 was the low, 36.86 was the high. So pretty close to pinning the needle for the week on the commodities CVOL as well. Next, we have the metals CVOL, almost exactly at 20.03, up a little over half a point, 0.55. This one is pinning the needle for the week. The low for the week was 18.6, the high today, right now, 20.03. So at the upper end of metals vol for the week as well. Treasury, it comes in 2 flavors, yield vol and price vol. We'll start with the yield vol. It's a more impressive number, 127.58, up 0.18, and also pinning the needle for the week in quite the range, nearly a 20-point range in terms of Treasury yield vol this week. Again, some of those numbers we're seeing wreaking havoc with the yields out there. 108.72 was the low for the yield vol. The high 127.58 right now. So we are pinning the needle to the upside right now. So nearly a 20-point range in the yield vol out there this week. You don't see movements like that too often. That's pretty impressive. Price vol, bit of a different beast. 7.2 is the price vol for the Treasury complex. It's up a whopping 0.06 today. On the week, it's had a range of 6.01 to 7.2. So again, we're pinning the needle there as well for the week. And also worth noting, a pretty much 1.2 point range on the week. When you're starting at a base of about 6, that's actually pretty wide. So a lot of action on the Treasury vol front this week. And then below that, we have our old friend FX. Never been a bastion for volatility, that FX CVOL 6.44, coming in a little bit this week, off 0.16. 6.2 was the low, 660 was the high, so hanging out close to the middle of that range for the week. And at the bottom of our CVOL movers and shakers list for this week, listeners, we have our old friend, the Ag Products, 22.44, off about a third of a point on the week. The range for the week, a little bit tighter than the rest of these we're talking about. 21.79 was the low that came last week. The high, 22.76, came earlier this week. So off the highs, but also off the lows as well out there. So an intriguing vol week out there. Rich, I know you watch CVOL a lot. Anything catching your eye on our CVOL movers and shakers this week?
Well, I think a lot of things catching my eye, but I think the first thing that jumps out at me is, as you kind of mentioned, a number of these products are kind of pinned at the highs of the week. And, you think about, we've had a pretty big week for economic data already. And of course, we've got a non-farm payroll, and then we kind of go to next week and we get inflation and the Fed. I think a lot of people might be positioning for some thinner summer markets with some potential catalysts out there and wanting to have a little convexity in the portfolio across any products that they're in. I think that's interesting. I also think it's interesting when you talk about the width or the range that we've seen in some of these products, like that price vol in treasuries. That, like you mentioned, 1.2 doesn't sound like a lot, and unless you're talking about something on a base of 6, that's a pretty big move there. I think there's a lot of different opinions starting to creep back in to the bond market here about what the Fed's going to do and what that means going forward. And I think that, to me, is really standing out, because I think that's the tail of the tape right now, is trying to understand. We've seen some cuts elsewhere, or we saw the ECB today. I think what the Fed's going to say next week, I think, is really going to set the tone for the summer.
And it's time to set the tone for the show, listeners. We saw it moving to the dark side this week. Number 5 to the dark side, it's the peso USD. We talked FX last week on the show. I was pretty excited because I don't really get my money's worth for that drop. But because Rich is on, he's an old school FX guy. Also, we've got FX lighting it up this week, and he's got some interesting analysis along that front. And because I want to get more value out of that FX drop, listeners, let's kick things off in the sometimes head-scratching world of FX.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
There we go, listeners. 2 weeks in a row. It's an embarrassment of riches on the FX front. All you FX heads can stop writing in. We're hitting FX. But Rich, one of the reasons I wanted to start off with FX as well, you kind of hinted at it earlier on. You had an interesting write-up over there in your Excel with options column recently for CME, talking all about the inflationary pressures, particularly when it comes to the pound USD. So a lot to unpack there. Kick us off, sir. Walk us through your article, some of the highlights. You always come armed with some interesting trades. What were the trades you're putting on in this environment?
I love to, Mark. And just, I think, just to kind of set the table for it, the FX, I understand. Listen, I trade FX. I understand you can go through long periods where there's really not a lot to do, but then there's certain periods when it's the only thing you want to do, I think. And as we're getting this potential period right now where you have potentially divergent central bank policies happening, we saw the ECB cut today. We've seen the Bank of Canada cut, BOE cut. Some are, if the Fed doesn't, then you're starting to see this kind of divergence in central bank policy, and that's usually sets the table for good, bigger moves in foreign exchange. And so this past week, I looked at sterling. I looked at sterling for a lot of reasons. I think it's one of the more interesting ones to look at right now. It's obviously been under pressure for quite some time. It's also topical. It's summer, right? If people are going on vacation, maybe they're thinking about a little sterling or maybe some euro for their vacation mode. So it might be top of mind for them as well. And when you're looking at sterling and kind of going through it, a lot of people ask me the question, like, what drives, foreign exchange rates, et cetera? Is it interest rate differentials? Is it purchasing power parity, et cetera? A couple of things that I've always found, work pretty well when I'm looking at it is the relative growth in money supply in each country. And so I try to track that, and I looked at that in the UK versus the US. And both have kind of been on a similar path until really kind of late last year. And then since then, we've seen a little bit of a diversion path in the relative money supply growth that's been going on. And so, that starts to look a little bit interesting to me. And then, the old maxim that I forget, I must have learned this early days, is that money goes to where it's treated best, right? And so I look at the relative performance in the gilt versus treasury market, and I look at the relative performance in the SPX versus FTSE type of markets, and try to, you can look at those and you can plot those and see what that performance looks like. And so the question is, what's going to be driving the performance here going forward? We've clearly seen some strong performance in the U.S. stocks, but if the Fed isn't going to be, if the Fed isn't in play or the Fed isn't cutting rates like others are, what does that mean for the future outlook? And so one of the things I look at with my students in our investment class is we look, when looking at how different sectors perform during different parts of the economic cycle, is this concept. A lot of people use it in different ways. It has different names, but in this report this week, I used a framework that Bank of America puts forward called the investment clock. And in this one, you're basically breaking down the economy into periods when growth is you can look at 4 quadrants: growth rising or falling, and inflation rising or falling. And we break those into reflation, inflation, stagflation, and deflation is one way to look at that. And there's different sector performance you would expect in each of those different phases. And so what I did is I went back and I looked through and added up the different sector weights, because we know when we're looking at different sectors across different markets, they're going to have very different weightings. And if you compare the UK and the US sector weights what you see is that the UK has much heavier weights on things like basic materials, consumer staples, energy, financials, even industrials to an extent. And where does the US have the heaviest weights? Well, like we talked about, technology, communications, we mentioned that, on the light side this week, consumer discretionary. And so when you look at this, the way the different sector weightings are, and you look at it through this framework of the investment clock, you can see which country you would expect to perform best in each of those phases. And when you look, one of the things when we think about what's been kind of top of mind a little bit, and if we look at the ISM data, for instance, that came out this week, it gives us some signs that potentially growth is falling, right? We saw the headline index fall. We saw new orders and inventories falling. We saw the prices paid moving higher, though, right? And so if we looked at some of the sector performance, what was starting to happen, et cetera, getting the sense that maybe the market's starting to think that stagflation is what we might be looking at here going forward for the rest of this year. And if that's the case, the UK stock market starts to look a lot more favorable to the US stock market from a sector weighting standpoint. And so, when I talked before about money going to where it's treated best, does that potentially set up the possibility that money might be rotating in the UK and out of the US on a forward-looking basis? Kind of building on to whether or not that inflationary stage really makes some sense. And of course, we got a CPI number next week. I also compared sterling to the CRB index. I compared it to gold and silver. And what you see is that, if you kind of go back through time, I looked at 20 years worth of data when, inflation as measured by these products is moving higher, sterling tends to do better relative to the US. And so that's kind of was the setup for the directional basis for the trade, saying, okay, if inflation potentially is going to be moving higher on a relative basis, then that really looks pretty favorable for sterling here. And so then, of course, you look at the sterling technical charts. To me, a lot of the technical charts are starting to break out. In fact, kind of a little bit of a pennant pattern here, that if we get above 128, it could get really, really interesting there, easily into the mid 130s, I think. Looking at where the moving averages now, where they're starting to turn and cross up. So again, getting a little bit more evidence for a potential bullish move in sterling, and of course, looking at CVOL in sterling. When I was looking at it this week, you can kind of quickly get some idea that at least when I was looking at this last week on a yearly basis, not necessarily on a weekly basis, vols were near the lows of the last year. And so it starts to appear that maybe it's a kind of a good idea to start to lean a little bit on the long side of volatility. In skew, the skew is tended to actually the skew in sterling tends to give us a little bit of a heads up. It moves before the CVOL does. And so we've seen skew turning higher in sterling as well, suggesting that maybe CVOL in sterling is going to start turning up, and maybe it started to have this week. So one of those things where I wanted to be, lean long options, and then looking at this, the skew changing, the skew could be even continue to move higher. I wanted to potentially express a long view, but do it in such a way that would benefit from the skew continuing to move higher. And so it really is a fairly vanilla strategy that I looked at, just selling 125.50 puts to buy 128.50 calls on an outright basis to essentially give me a synthetic long position with a little bit of a buffer, obviously, between the strikes, but leaning to the fact that if we start to move higher and the skew starts to pick up, I'm going to get a little bit of a bump in volatility. In this trade, I was looking out to August to give myself some time, to give all of you who are going on vacation into Europe and the UK time to accumulate your pounds before you go on vacation and push that price higher. And that's one where I'm like, okay, if we stay in this range, and it's largely been in a 124 to 128 range for quite some time. I did this for a small premium, so I'm not going to lose out anything. But if we get that move higher, we get a move higher in skew, it's going to certainly be a better way to express my long view on sterling than simply just doing the futures.
All right, a lot to unpack there, Mr. Rich. Let's dive in here on the old pound USD. See what's lighting it up. Go into that FX drop down, listeners. You're going to go into the FX majors. You're going to slide down about 1, 2, 3, 4, 5 slots to the old pound USD. It's an active one, not the most active FX complex out there. About almost 11,000 contracts on the tape this week. So not explosive, not nothing either. It's not oats. It's also not the old 3-month SOFR, somewhere in between. And of that paper, 65%, so about 2/3 going up in the July contract that has about 29 days to go. So we're going to hang out there, listeners. You're wondering, what is the vol right now in pound USD? As I said, FX vol not known to be the most explosive. 6.25 right now, pretty much unched on the week. Skew-wise, last week the puts were a little bit bid, 2.9% bid. A little bit more bid this week, 3.8% bid. So creeping up a little bit. Again, you're starting from a low baseline already, so 4% on top of a 6.25%. Not a huge bid. The calls last week, 1.6% cheap. This week, 3.3% cheap. So puts getting a little bit more bid. Calls getting a little bit more offered. Let's see what was going on out here. Of the 10,000 contracts, 2,000 of them going up. So pretty much a fifth of the volume this week. Going up in these 1.29 calls. By the way, that future in July hanging out at a 1.2796. I love the strikes in FX. So slightly out of the money calls here. All of that going up today, which is weird. 2001 going up today. Nothing else to speak of in terms of spreads or rolls that I can see. Just straight 2,000 lot of the 1.29 calls. Worth noting the OI about 750. So clearly opening paper. I don't know, Mr. Rich, 1.29 calls in July, 29 days to go. about 2,000 times. Does this one float your boat, sir?
I think it sounds kind of interesting for sure. Like you said, I mean, I think vol could potentially tick up there, and then I certainly like it directionally. So it's certainly an interesting one.
Well, before we roll out of FX, do you want to hit something else? Maybe Euro USD, given what's going on in the ECB, or do you want to roll on to another complex? I'll let you choose.
Yeah, I mean, take a quick look, if you don't mind, at the Euro USD is with the ECB cutting rates today. I think that might be interesting.
What are your thoughts on that? I don't want to turn this into a, big Fed watch, Fed debate show, but obviously the notion of cutting rates in this environment, to put it mildly controversial, what are your thoughts on ECB taking that step? First time since 2019, pre-pandemic.
Yeah, well, the ECB is not, has a history of doing the wrong thing at the wrong time, as we saw right before the financial crisis. Interesting to me that they cut rates, but at the same time said that they expect inflation to stay high. And so it's just, I think what we have to understand, though, is that the Fed has a dual mandate of jobs and inflation, whereas the ECB only has one mandate, and that's inflation. And so if the only mandate is inflation and inflation staying high, it is a little bit surprising that they're cutting rates, though I know in the past the ECB has indicated that sometimes it sees inflation as a tax on consumers that it expects to slow down the economy. So perhaps that's the read-through here. But we know that the inflation's been we feel some pain in inflation here in the U.S. the last couple of years. In Europe, it's been even worse, and so a little surprising that they're kind of going to that. But maybe the extremes of their inflation, even more so than ours, is really kind of, we've seen some recessions there, so maybe it's time. Maybe they're right that the idea that it's more of a tax on consumers than it is some price pressures that we have to worry about.
The wrong thing at the wrong time. Interesting way to put it out there. You're right. They have made some head scratchers in the past. Is this one of them, listeners? Are you folks down with a little bit of a rate cut out there in the ECB? What does this mean for next week? Of course, all eyes on the Fed here domestically, as we see what's lighting it up out there in the big dog in FX, Euro USD. To give you a frame of reference, a point of comparison, about 10, 11,000 contracts going up in the pound USD. Euro USD, 66, almost 67,000 contracts out there. So quite a bit more active out there. And also, interestingly enough, given what we were just talking about, maybe not surprising, also very front-loaded. 40% of the paper this week going up in the contract that expires in one day. Rich, you're an old school FX guy. I mean, obviously people trade around these big announcements out here. That's a big mover in FX. But are you surprised that fully 40% of the flow out here in Euro USD is what would be termed right now effectively a 0-day contract, sir?
I am a little bit surprised, to be honest with you. I mean, but FX is no stranger to 0DT options. We've had expirations twice a day, every day since the 80s, and so kind of an OG of 0DT options in FX. So maybe not surprising from that standpoint, but given at least it's a day with a catalyst on, so and not just a random day. So I guess that gives it some solace.
The OG of 0DTE options. I like that. You're full of them today, Rich. You're putting a smile on my face today. Let's see where Euro USD is hanging out right now, listeners. That front, again, I love the strikes out here. That front future, 1.0896. Going away in about less than a day, 0.8 of a day right now. That's where all the action is in Euro USD this week. Like I said, 40% of the paper. Now, obviously, this contract wasn't listed today. They had a full week's worth of trading on it, but still. It's interesting to see just how front-loaded FX has become as well. Everything is zero-dated these days. I mean, we could talk vol, but it's kind of a meaningless number. 10 vol with less than a day to go doesn't really mean anything, listeners. If we go out a little bit farther, let's say we go out about 20-odd days, then that vol is about a 5.3. So that shows you outside of right now, vol pretty anemic. The big dog out there, though, are the 1.095 calls. So again, slightly out of the money calls, trading most actively probably yesterday. The total for the week is about 7,100, 4,100 going up yesterday, all opening obviously. Today about 1,600, 800 on Monday, about 450 on Tuesday. Looks like opening all week long. So folks piling into those 1.095s. Today's paper 1,600 against an OI of 5,200. So they could be taking some off out there today. Again, not surprising that we're seeing this near-dated action, just maybe the the amount of it, the percentage of dominance in the near dated stuff, may be a little bit surprising. Rich, you like these? The 1.095 calls now with 0.8 of a day to go, sir.
You know what? I'll tell you though, as a veteran of the CME FX floors, the sterling and euro are much easier to remember than the inverse of the yen strikes. Those are a little bit harder.
Yeah.
The 0.0007 something
does make it a little bit less approachable for a lot of, let's say, the retail listeners. They see strikes like this. They could see an Apple strike of 200. That makes intuitive sense. 1.0896 in the euro USD. A little bit more intimidating for some of the folks out there. Let's do a few more, then we roll on out of FX listeners. The second most active contract out here this week was actually the 1.11 calls going out in July, a whopping 29 days away. It's kind of a close tie between these 1.11 calls and the 1.085 puts. Those did, expiring tomorrow, those did 4,300 contracts this week. But the 1.11 calls taking it this week with a whopping 4,600. Almost all of that again yesterday. 3,200 on yesterday, mostly opening. 800 Tuesday, 500 today, not much on Monday. Today's paper against an OI of 7,000. So folks could be bailing on those today as well, but they got some time, so probably not. 1.11, that future in July is at a 1.094 out there. So fascinating stuff to be found in the world of FX. Mr. Rich, I could get the rest of the show's worth of money out of my FX drop, but we probably should hit on some other complexes. What else is on your radar? Where else you want to go this week, sir?
Well, I think the next best, next closest thing to FX is either crypto or metals. I mean, with gold and silver having a good run and Bitcoin and Ether having a good run, those are people's preferred FX, perhaps, if they don't like fiat.
That's true. A little bit of preferred FX action. We'd love to talk crypto. I'm not sure how much volume is going up, but I think we'll head out first to the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the shiny stuff we go. Go into that drop down, pop out of FX, go 3 slots up. Actually, I'm sorry, go 2 slots down. I'm looking at cryptocurrency. I'm distracting myself. Go 2 slots down to the metals. And then go into products, go into the precious. And we'll probably kick things off in gold. Speaking of crypto, I did look in the little transition there, and I was right. Bitcoin, the big dog products this week, doing a whopping 555 contracts out there. So again, I wish we could sink our teeth into all the CME flow. It's just having a hard time materializing out there. We speculated on some reasons why that might be on our crypto rundown program on Monday with our buddy Mr. Greg Magadini from Amber Data. So if you're curious about some of those reasons, maybe check out the crypto rundown out there if you are so inclined. Let's see if the micro Bitcoin, the more bite-sized contracts, did any more flow this week. And the answer is yes and no. 1,100 contracts, so that technically is more. Remember, that is a bite-sized contract. So overall, not a ton of impressive volume. So to the world of metals we go, Mr. Rich. Let's start things off in the big dog, which is gold. What's catching your eye out there in the world of the shiny stuff, Mr. Rich?
Well, it still feels like the things that have been driving gold higher are going to continue to drive gold higher. It's monetary stimulus, which even though we've had QT, we've seen a lot of liquidity with the reverse repo coming down. The Fed, if it starts to ease, that's again some easing of policy. And then, of course, the fiscal, I think, has remained strong. So those have been the drivers of the gold bugs and other people in the gold. And so I got to think that that's still in play. So I have to think the upside might still be in play for people.
Are you saying people like upside in gold? How dare you, sir? What craziness. I'm hard-pressed to think the last time we didn't talk about upside going up for size out here in gold. Let's see what is going up out here this week, listeners. And maybe not surprising given what's going on the macro front. And again, I like that way of thinking about it. Crypto and metals are people's preferred FX vector, Mr. Rich. I think there is some truth to that because obviously some numbers going up out here in gold this week. 238,000, so closing in on 250,000 contracts this week. Respectable volume, all things considered, for the big dog. And unlike FX, which was all front dated, gold going a little bit farther out, going all the way out to the August contract. This one has about 49 days to go, listeners. That future 2391, if you're wondering where gold is hanging out. So obviously well north of the 2000 level and has been for some time. Now, vol-wise, what's cooking? I said metals, one of the CVOLs that was kind of pinned at the upper end of its range for the week was at about a 2003, the aggregate metals CVOL. What is gold vol out there in July? About a 14.5, up 1.25 points. So again, vol getting a little bit juicy out there. 14.5, not explosive by any means. It's not nat gas. It's not Bitcoin. But when you're starting at a baseline of around 13, 1.25 point move, nothing to sneeze at. In terms of skew, you know what it is by now. You've been listening to this show. You know folks are just bidding up the calls. The question is how much? And this week, the answer is 6.8%. At least that's what it was last week. This week, it's pretty much unchanged, 6.7%, down 0.1%. Last week, nobody wanted the puts, 4.2% cheap. This week, they want them about the same level, about 3.8% out there this week. So not a huge evolution on the skew week over week. But volume-wise, the big dog out here this week, listeners, looks like, surprise, surprise, it was a little bit of longer-term upside. I never could have guessed that before I ran these numbers, listeners. It was the 2,500 calls. Again, we're at a 2391 in that future. So 109 point out-of-the-money calls going up 13,121 times this week. So out-of-the-money call action, I never would have suspected it. Again, pretty active all week long, even though the big day was yesterday, 5,300. So a lot of action heading into this announcement today. Maybe not surprising. Today, 3,200 against an OI of 9,600. And Tuesday, 3,000. Slightly closing on Tuesday, which is interesting. 1,500 on Monday. So this is a pretty active strike all week long. Makes sense. It's not the 2,400s, but it's pretty close to a pretty round psychological strike near where we're trading right now. Behind us, speaking of 2,400s, how about the 24 halves, listeners? Those are number 2. About 12,000 of those going up this week. The big day was Tuesday, interestingly enough. 5,500 on Tuesday, 2,200 each yesterday and today against an OI of 9,800. So OI-wise, 24 halves and 2,500s, very similar, 9,800 versus 9,600. And about 2,000 going up on Monday. So they were opening all week long as well. So opening upside in gold, going out a little bit, not exactly surprising. Listen, let's see if we could scroll around to see any other interesting. It looks like the 2,500s were the strike of the week, Rich. They were active. They're leading the dance in August. 2,500s going up 7,300 times in September, going up about 2,000 times in October, going up about 2,000 times as well in December. So I guess, Rich, the 2,500 strike, kind of action-packed across the board. You like that strike for gold, sir?
I tell you what, I like the upside nature of it. I don't like round numbers like that. I think there's too much of a behavioral bias towards those. So I usually prefer the more idiosyncratic strikes, shall we say. But, I definitely appreciate the direction that they're taking.
So you'd be more of a 24 half guy than a 2,500.
Yeah, maybe even a 2460. Just to mess with people.
That's the old school FX in you. That you like the weird strikes.
Yeah,
that's what
you want people thinking like, what were they thinking? Why did they do that? They must know something more than just the round number.
You like to tweak people with your trading. I like it. I can get behind that. Since you mentioned shiny stuff, you like a little bit of silver. Silver's been popping off as well of late, doing about 75,000 contracts this week. So no slouch for silver. Anything catching your eye in the world of silver, sir?
Well, I mean, I think silver is kind of the same thing, except for obviously it's got a little bit of an industrial bent to it as well. And I think so the silver kind of confirming this move, and we saw a little bit of that even when in the base metals too. With copper had a nice run there. Maybe it's kind of pull off a little bit, but I think to me silver just confirms a little bit more of this move higher in gold as well.
Let's see what silver does confirm out there, listeners. Let's head on out to the drop down, go one below gold to silver. Like we said, about 75,000 contracts. So no slouch out there as well. I know Bitcoin would love to do this kind of volume. FX, even Euro USD can't match even silver out here. So kind of shows you the relative volume levels out here. And unlike FX going away in less than a day, silver also going a little bit longer term out here, about 19 days, the July contract. That's where we're hanging out. That future obviously at a 31.42 right now in silver. So up about a full point since Monday, or about 3.22%. Obviously not enough to break into our movers and shakers out here this week. Actually, net, our bottom number 5 was actually 30-year, 3.22%. So obviously it had less of a move net since our last show on Thursday. Otherwise, it would have been in our light side this week. So silver, pretty close to breaking in yet again. Wherever he is right now, our good buddy Uncle Mike must be pretty happy on this continued upside move out here in silver. And what's leading the dance? I said we're at a 31.42, and that future was the July 35s, listeners, going up 3,200 times this week. The big day yesterday, again, a lot of paper yesterday in the metals complex for obvious reasons. 18, almost 1,900 contracts, all that opening. Today, about 600 against an OI of 7,700. So a lot of paper open on the 35s. 400 and 300 on Monday and Tuesday out there, closing mostly out there. I'm guessing, Rich, given what you said before about the even money strikes, you're not a fan of these July 35s. Maybe you'd prefer a 32.5, something like that?
Yeah, I think so. I same way. You want it directionally the same way, but you want to just get them thinking a little bit.
And right behind that for number 2, we had about 3,000 of the 32 calls also in July. These were actually front-loaded, most of them going up on Monday, about 1,400 on Monday, and then 400 to 600 each the rest of the week. Today we have an OI of 2,500 at the end of the week. So 32s, again, those are obviously a lot closer to the fire, a little over half a point out of the money. You like those a little bit better than 35s, listeners. Looks like we have paper could line up today and Tuesday. So it looks like we could potentially have some verticals, 32, 35s going up. Maybe a little bit of some roll action as we're getting close to the 32 strike. Either way, the 32 calls in July taking the number 2 spot. We got time, Rich, for probably one more product here on the show. What's floating your boat out there? What do you think we should squeeze into the show next?
Well, I mean, we talked about nat gas on one of the light side. I think there's a really interesting chart formation kind of unfolding here in nat gas. I wonder how that's looking.
All right. It's hard to go a week, listeners, without talking about the big dog, which is nat gas. So here we go, off to energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, you know what to do by now if you've been listening to this show for a while. Go into that drop down, pop out of the metals. You're going to go up, a whole bunch of slots. Let's see, 1, 2, 3, 4 slots to energy. Then from there, we're going to go down 3 slots to nat gas. And then obviously you're going to start in the nat gas product side out here. And what's going on out there in nat gas this week? Listen, like we said, it was our number 1 light side mover, 7.23%. to the light side. Last week, number 2 in the other direction, off 11.36%. Now, before you say, well, it's around a $2 to $3 underlying, so of course it's going to have large percentage moves every week. It's easy to do that. And yes, you are correct. But we wouldn't include it week after week if it wasn't delivering on the volume front. We just talked about the FX complex. The most active FX major is the old Euro USD, doing around 60-odd thousand contracts. Silver just did 70-odd thousand, close to 250,000 for gold. The big dog in the metals complex. Allow us to turn our attention now to nat gas, listeners. 1.05 million contracts this week. So once again, putting the lie to the statement that folks don't want to trade option on a sub $5 underlying. They are clearly lighting up the tape yet again. Normally we expect 400,000, maybe 500,000 if things are lighting it up. 600, 650 is a really explosive, pun intended, week for nat gas. So over a million now, 1.05 million. I don't know, Rich, this paper continues to deliver out here. We could do a whole show, just the nat gas report every week, and there'd be a lot to talk about. What's catching your eye out here in the explosive stuff this week, sir?
Yeah, I mean, it's like I said, this is one where you've had such a sharp move in a short time. It's starting to show some volatility. I wonder if people are liking the directional play still, or if they're looking to turn it into a little bit more of a volatility play here. And so that's kind of what is, to me, maybe the more interesting thing was to try to get a sense of how other people are kind of viewing this potential move. I wonder if it's more of a volatility play than a directional play right now.
I know it's a volume play, Mr. Rich. I'm looking now. There's more paper going up in just the 2-quarter puts in July in nat gas, just that one option, than the entirety of the silver complex, Rich. 84,000 of the 2-quarter puts going up compared to, what do we say, 73, 75,000 of the entirety of all of silver. So that just puts it in some stark relief here, listeners, just how active nat gas is. It's the 3-month SOFR, the old school Eurodollar of the energy complex, and indeed outside of, your E-mini S&P and of course your 3-month SOFR, it's kind of the big dog out there. It's doing just the bonkers, to use a technical term, bonkers volume out here. Like we said, 2-quarter puts in July taking the pole position this week. July itself dominating the tape, 50.5% of that 1.05 million contracts going up. In the July contract, it has about 19 days to go. I said we're hanging out at a 2.83 in that future. The vol, now we're starting to get to some nat gas vol levels, Rich. This is the nat gas we all know and love. 71.3, up 16 and a half points. Rich, when nat gas was languishing around a 50, 55, it didn't feel like the same product. Now here we are, 71.3. We're starting to get into nat gas territory. Not quite triple digits yet, but we're starting to feel some vol. You seeing the same thing, Rich?
Yeah, for sure. I mean, that's you're talking about whatever. That's 4.5% ish a day. That's not that big a deal. I think we still got some room to go on the upside, maybe.
Yeah, we've seen nat gas break into the triple digits before. If it keeps up this kind of movement, it could certainly get there again. So big move in nat gas this week. Big move in vol. Again, one of the other reasons why we're close to pinning the needle there on the energy CVOL. Remember I was saying nat gas, a big component of that. You could clearly see why the energy CVOL close to its high for the week. Nat gas, a big driver of that. But like I said, the 2-quarter puts lighting up the tape this week. 84,000 of these bad boys going up this week. The big day you might think was Wednesday, and you were right, but just ever so slightly. 26,400 on Wednesday, actually closing because a lot of paper, almost 25,000 going up on Monday. Looks like we had a bit of a weekly trade going up here in these 2-quarter puts. So opening about 25,000, close to it on Monday, closing a little more than 25,000 on Wednesday. In the between, we had 9,600 going up on Tuesday, also closing out there. And then we have today a whopping 23,665. That's against an OI of 42,000. So my goodness, just 2-quarter puts for days out. I have to get our old buddy Carly back on, see what she thinks about puts out here. That's 19 days to go, 2-quarter puts, Rich. I mean, that's a pretty impressive move. That'd be almost 60 cents to the dark side. Then again, we saw nat gas move about 25 cents just since Monday, so it clearly can do it. But what are your thoughts on these downside puts in July, Rich? The 2-quarter puts, nearly 100,000 of them this week.
Yeah, that seems a little bit. That's a big move. Like you said, nat gas can do it, and maybe we're looking at a little bit of a reprieve in the weather. I don't know, but we shall see. But I think it's an interesting here. That might be a little bit aggressive for me.
Bit of a bridge too far. Well, Rich, if you were lukewarm on those, you're gonna love the 2 puts. Also in July, going up about 58,000 times this week. I'm looking here, maybe on Monday there was some vertical action. We had about 24,000 of the 2-quarter puts versus about 33,000 of the 2 puts. So there could be some rolling action. There was slightly closing on the 2 puts. So it is possible folks were rolling up to the 2 quarters. And that is possible. Maybe on Wednesday they rolled those up to another strike. But either way, a lot of paper going up on Monday on these 2 puts, 33,000. The rest of the week, slightly less, 14,000 on Tuesday, opening there, 6,000 each Wednesday and today. Today's OI, 57,000. So size put paper here in nat gas. If that's too far out for you, Rich, you didn't like the 2 quarters. I know you didn't like the 2s. Allow me to present the 2 half puts also in July. Also lighting it up, also doing nearly as much paper as the entirety of silver. 55,000 of these things going up as well. It's just a July put palooza here in nat gas this week, listeners. 55,000, pretty even paper all week long, though, which is kind of interesting. Unlike the other 2 contracts that had a concentration on one day or another. This one, 15,000, pretty much close to it across the board. 15,000 on Monday, mostly closing there, which is kind of interesting. About 15,000 again on Tuesday, mostly opening. And then 12 to 13,000 each yesterday and today, kind of back and forth, opening to closing. Today's OI, 37,000. So my goodness, Rich, if you just add up the 2 puts, the 2 quarter puts, just the OI and the 2.5 puts, you're talking 140,000 just in the OI on those 3 strikes alone. I'm guessing maybe if you had to go a put, the 2.5 put a little bit closer to the fire is a little bit more to your liking, sir?
Yeah, I think so. I think so. I wonder aloud if there may be some ratio put spreads or put trees or something that are going on there as well. You kind of mentioned maybe some people rolling up and maybe just putting on some directional ratio of spreads to the downside. I don't know. It's interesting, but I think if you're hoping for things to kick in around 2.25 or 2.0, that's an aggressive move, and these 2.5s look a little bit more tasty from that standpoint.
Yeah, and then if you don't like those, you're not going to like, listeners, a lot of 2 puts. Like the 2 strike was the strike of the week out here. In September, we got the 2 puts going up about 25,000 times. In August, also going up about 22,000 times. And in October, going up about 20,000 times as well. So pretty much a 2 put palooza out here in nat gas, listeners. Worth noting that October futures at a 296. So those 2 puts even farther out of the money. There probably is, you're right, Rich, probably is some rolling activity out there. But you know what? I lied earlier. Let's do one more for the people before we get out of here, Rich. Why not? So let's squeeze in one more complex. What else is floating your boat, sir?
Well, I mean, to me, some of the more interesting moves were in like corn, soybeans, and wheat. So maybe we want to take a look there.
All right, listeners, we're going to round it out in ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, going to that drop down one final time. It's pretty easy to find the ags. It is an alpha order list after all. We mentioned the ag products bringing up the bottom of our list on our CVOL movers and shakers for the week. 2244, off about 1/3 of a point today, and hanging out kind of at the middle of their weekly range. The low was 2179, the high 2276, 2244 was where that CVOL was coming into the show. And in terms of the ags complex, we haven't had a chance to sink our teeth, pun intended, into the big dog of the ags complex, which is corn. Now, corn's doing its usual amount of paper, 452,000. That would normally be pretty impressive if we hadn't just come off of nat gas, which is just doing that much almost in a few puts out there. Corn right now, 453.25 in that front future, listeners, up about 7 handles since Monday, or about 1.5%. Mr. Rich, what's catching your eye out there in the big dog of the ags complex, sir? Corn.
Well, I think we've seen the price action has been after a pretty decent run has been come off pretty aggressively. I wonder if there's not that same sort of downside expression here that we were seeing in that gas, not to the same magnitude, of course, but maybe we'll see some funky strikes to the downside in corn.
Funky strikes. Well, they can't be as funky as FX, listeners, but we'll try. We'll try to find some for you out here. Like we said, about 450,000 contracts on the tape this week. Of that, about 1/3, 32%, going up in the July contract. It has about 15 days to go. We're going to hang out there. That future, 453.25, like we said. What is the vol in corn? You might be asking. 23.75, up about 1.6 points. So getting a little bit frothy. And not as explosive as we've seen in the past, but also not nothing either. Kind of hanging out in the middle of that range. Skew-wise, interesting call skew move this week. Last week, the puts were 0.5% bid. This week, going the other way, 4% cheap. So a little bit of swing on the puts. The calls, 1.7% bid last week. This week, 5% rich. So people want some calls. They don't want themselves any puts. And what was leading the dance out here, listeners? It actually wasn't in July. We have to go out a little bit farther. You have to go out to September. September 500, September par calls, going up 15,000 times pretty much exactly this week. The big day was Tuesday, 5,500 on Tuesday, opening there, 4,500 on Monday, 3,800 today against an OI of about 33,000, and 1,200 on Wednesday, slightly closing. So, Rich, you were betting on some downside. Looks like we got more upside here, at least strike-wise, in corn. What do you think, sir?
Yeah, well, color me a surprise. That's interesting. Maybe it's good to know. I mean, those the ags have had a bit of a rough run of it, so maybe bringing some optimism back is a good thing.
In fact, it seems like the 500 calls are the option of the week out here in corn. In Gies, they went up about 14,000 times, 2,100 times in August, 7,000 times here in the July contract. So, and of course, 15,000 going up in September here. So just 500, the par calls in corn here, listen. Again, that's why we crunch the numbers here on the show, listeners, because of surprising revelations like that. All right, listeners, unfortunately, that music means we are running out of time here on the old TWIFO program. But before we go, Mr. Rich, if folks are intrigued about what you were laying down with inflation and with pound sterling or with anything else you're working on, and they want to check it out for themselves, where should they go? What should they do?
The first stop is at the Excell with Options. If you go to cmegroup.com, look under Insights, you can find my Excell with Options blog. It comes out every other week, and subscribe to that and get that to your inbox. You can find me on X at Excell Richard, or my Substack is called Stay Vigilant. So stayvigilant.substack.com. Those are the best places to find what I'm writing about. A lot of different things across a number of different markets, all with a macro type of lens.
There you go, listeners. Check him out at all of those different outlets if you want more in between his appearances on this program. And of course, if you want more data, head on over there, cmegroup.com/TWIFO. That's the place to begin your journey. After that, you can check out the CVOL report. You can, of course, coming up next week, maybe you want to check out the Fed Watch. A lot of great data. Be warned, you head on over there, you're going to be going down a rabbit hole of some interesting data, but you'll come away probably better informed, better armed for these markets. So it's a worthwhile venture down the rabbit hole. But start it off, cmegroup.com/TWIFO. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, talking a whole mess of vol on volatility views. Who's going to join us on that program? You got to tune in to find out. After that, one final time for Options Oddities, exclusively for our friends hanging out in theoptionsinsider.com/pro. We'll be joined by our buddy, Mr. Matt from ORATS. He's always got some intriguing, unusual activity up his sleeve he'll want to talk about as well. So if you want to check that out, again, theoptionsinsider.com/pro. Then we're back again on Monday with the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.